stock of the day, which I pick, a stock that's in the news. Thought we'd focus on Adore Beauty because we haven't covered it here on the call for a while. Adore Beauty has responded to media reports. It has received a non-binding indicative offer from British e-commerce retailer THG, confirming the news. It's also rejected the approach at between $1.25 and $1.30. Shares saying it significantly undervalued the company and didn't align with the best interests of shareholders. You can see the reaction of the market there, up at 20%. Adore Beauty's share price has been absolutely crushed since it listed, 2 or 3 years ago. And it's been, before today's news, end of last week, it was around 95 cents, bid between $1.25, $1.35, but in recent years it's been as high as $6. So it's a really interesting move on this and response from directors. David Lane, what did you think of the offer and what should shareholders be doing?
I think that shareholders who are currently in it should certainly be holding and looking for a higher bid to come. Adore is one of those businesses that was the darling during the COVID lockdown period. It's an online beauty product seller. They did very, very well. Their sales coming out of into the COVID period were very, very strong. What we've seen though in recent years is their revenue and their sales have declined, and I guess of a big concern is their profitability. So they had about $180 million of sales in the last year, but their EBITDA was only $600,000. So they're struggling to turn a profit. The business trends in recent years have been declining as far as the sales are concerned. So certainly when it first came onto the market, it was priced very well and priced for long-term growth. They achieved that growth in the short term, but haven't really been able to sustain that recently. So yes, obviously shareholders who have been in it have been suffering for a long period of time. So yeah, I'd be holding on to them. At $1.11 or $1.12 at the moment, there is upside if that bid continues, but the management did actually say that the potential bid was had a lot of conditions attached to it. So it's probably not the last that we see of this.
Would you put new money in?
So I guess it's difficult at the moment. I probably wouldn't. It's not a stock that Ord's cover. And I think it is a stock that has a number of issues around it. As I said, their revenues have been declining and they're struggling to generate a profit. So it's probably one I'd be steering clear of if you don't already have it.
Yeah. Jess, what do you think? As we saw from that 5-year graph, it was a pandemic darling, wasn't it? Launched around the pandemic, got to $6.70. Even the start of this year, it was around $1.70. Now at 95 cents. Been lots of talk in the media over recent, not just in the last day or two, but the last couple of weeks, that it could be attractive to someone from overseas. What do you think of it?
Well, I guess if you are currently in it, definitely wait and hold and see if we do get a subsequent offer, and that's probably going to be likely. But if you're not in it, I would be pretty bearish on the stock. And the fact of the matter is, pretty much spelling out the pictorial view of what you were highlighting from a chart, but it really illustrates the plight of Aussies. And so consumers are pretty much doing it tough, and that's why their earnings margins are paper wafer thin. So you're looking at earnings growth of 2 to 4%. That's pretty small. So I do think there's better opportunities elsewhere. But why they've declined the offer as well? Think about their subscriber growth. That's a pretty new revenue line for Adore. And so this new line is pretty attractive for those in the beauty space. So they're offering 18 brands that a lot of ladies, I guess, and men know and love, like SkinCeuticals, for example. They've got pretty sticky customers, but basically you get a discount when you sign up through Adore, and then they replenish your orders when they get low, say about after 12 weeks. So that's going to keep a lot of active, sticky customers. But still, all in all, I think the earnings growth margins are still too small for my liking, to put my money where my mouth is.
Yeah.
So yeah, I don't think the long-term growth stories there.
So hold on to it. Don't put new money into it. It's really interesting because, Jess, this was a stock that a lot of people said would be insulated from a downturn because, you know, beauty products can be those small, sort of less expensive rewards to boost you up, like the old lipstick index of decades ago, and it just hasn't worked out. And I noticed this morning there was a trading update from Dusk, who do the candles, and you would think, well, that's another classic purchase that doesn't cost you a lot of money but makes you feel good. But their sales were down as well.
It is a really tough time for those retailers. There's not much margins in these type of profits, particularly while we've got the RBA hiking interest rates. You know, we've got another rate hike on the table. So I really don't think, if you are looking to deploy new capital, I really don't think these type of players are the place that are going to offer the most upside, Koshi. So I do think that there's better avenues for growth than some of those I think we'll touch on today.
Okay, excellent.